Hi, my name is Presley, and I'm going to be explaining this problem 6 in week 9 of the quiz access, chapter 5. What we're basically doing cost flow assumptions, and I hope this explanation could help. So I've pretty much brought everything we need out here in Excel so that we can just work off this. And this is the question in McGregor Hill or wherever it is. Yeah, McGraw Hill. Yes, this is the question. All right, before I go in, I just want to explain what these things mean so that we can know what we're talking about. We're basically talking about how do we sell and calculate ending inventory. Well, how do we sell inventory? How do we calculate inventory? There are, in this case, 4 ways. And I'll start with FIFO, or first in, first out. First in, first out assumes the oldest inventory items are sold first. So if you bought 5 items of inventory today, 5 items of inventory tomorrow, and you try to sell something, you would first sell the stuff you bought today before you sell the stuff you bought tomorrow. And that's basically what it means. First in, what comes in first goes out first. And then for last in, first out, LIFO, it's basically the opposite. So what comes in last goes out first. So if you buy stuff today and tomorrow and you want to sell, you'd sell the stuff that you bought tomorrow immediately, and then you'd leave the one you bought before. So that's what it means. Specific identification just means you track each inventory item individually and assign the actual cost to each item sold. So whatever you buy, you have like maybe you have a SKU or you have an identification number, you track it exactly and say, this is what I bought it for, this is what I sold. So you know exactly what you bought and exactly what you sold instead of just mixing it together like FIFO and LIFO. And then in weighted average, this just calculates an average cost of all units available for sale during the period and assigns this average cost to both ending inventory and cost of goods sold. So basically, it's an average of all the prices of all the units, and then just you find an average, and that's what you use to calculate cost of goods sold or ending inventory. Now that we kind of understand that a little bit, let us use these tables to calculate it. So this table is for specific identification. This is for weighted average for FIFO. This here is for LIFO or LIFO. Um, let's just start. One thing you should notice though is this says the company uses a periodic inventory system and its ending inventory consists of 360, 120 from each of the last three purchases. You should note that this right here is only for specific identification because now we know where exactly the ending inventory is from. But for FIFO, LIFO, and weighted average, we have to use the assumptions we already know about them. So the assumptions we know, let's start right here with FIFO, for instance. The assumptions we know are that first in, first out. So if this is January 1, you have beginning inventory, you have March 7 purchase all the way to 19. If you want to sell anything, you first sell from December stuff, then you sell from October stuff, then you sell from July stuff, then you sell from March stuff. Oh no, sorry, the opposite. Sorry, I'm sorry about that. FIFO, you first take from beginning inventory. Sorry, just not to confuse you. FIFO is you. If you want to sell, you sell from January to March 7 to July 28 to October 3 to December 19. What I was talking about earlier on was actually last in, first out. Sorry, sometimes I just got confused too. But yeah, FIFO, like I said, remember you sell from January to March to July to October to December. So now we already know that the total inventory is 3220 units. This is it right here. And we know the ending inventory consists of 360. We know that because it tells us 360. Now it tells us where they are from, but that doesn't apply to FIFO, remember, because this 120 is only for specific identification purposes. So, but we know 360. So we know for sure that the goods or the unit of goods we are buying is It's basically 2860. And this is important because we'll need it. Now, how I usually do it is I just assign the units. Now, in units sold, I already know that we need 2,860 to go. And beginning inventory has 220. So I know for sure beginning inventory, all of it was sold. Now, all I'm trying to do is make this into a sum so that I know exactly. Sorry about that. There you go. All I'm trying to do is make this into a sum so that you know exactly when it gets to cost of goods sold. And pretty much I know already that 480 should be good. It's 700. Now here I also know 120 most likely should be good. It still hasn't got into 28. Yeah, so now I could do this just for us. This is just another extra thing for us so that we can know how much we need. So we need 1040, and I know already that if we need 1040, then this is good. So now we just need 40. So we're only going to take 40 from this, right? And because we already know that we sold all of this, sold all of this, sold all of this, sold all of this, and only sold 40 from this, we can just put 360 here, which matches our final end of inventory. And immediately we can see our answer here. Now, I have just written like some sort of sum function to like add all of this to time unit sold times cost per item to find the cost of goods sold, unit remaining times cost per items to find ending inventory. So this isn't like magic or something. It's just some basic things I already did so that we don't have to like go over that. What I wanted to talk about really is how to find out which one goes where. Now that we kind of figured this out, we're just going to do the same thing for the other ones. So we've done FIFO. Now let's do LIFO. Now remember, before my mistake, or before me explaining it to you weird, last in, first out means whatever you bought recently goes out first. First in, first out means whatever you bought previously goes out before the new thing, before the new inventory. In this case, so we're saying that here's how I usually do it. I usually start from here. So remember that what I'm trying to do is basically make sure that I get up to 2,000 up to this in the cost of goods sold. So I do 400. 400 is good. I think 1,000. No, I think I know. And then this is a little bit. Let me see whether it's enough. It's still not enough because it's not 2860. Now, this, just to be sure, I could just do this minus this. And I know 340 is what I need out of this. So 340. Now I have everything I need. And remember that this has to be equals to 360. This has to be equal to 2860. So I just do this minus this to know how much I have left. And I know I did not sell any of this. So I am good in that. And we should have our LIFO right here, which is 1,071 and 9,881. And that's pretty much how I did. So you see how I did this? I started from the top to the bottom because it's first in, first out. From here, I started from the last thing we bought to the top because it's last in, first out. And then now let's go to specific identification. Now, this is important because it said this is where this 120 comes in. 120 from each of the last three purchases. The last three purchases are 1, 2, 3. So I'm just going to go and take 120 from here, 120 from here, and then 120 from here. This is probably easier because the teacher made it easier for us with the question. But now I can already say I know how much is being sold. Here I know I'm just going to do this minus this. to know how much remains, I'm also going to do this minus this, and I'm also going to do this minus this. And I really like to do this, even though it takes a lot of time, but just to confirm, you just, do this. And once you confirm it, you're good to go. And then you can just go up here and look at what this is. Remember again, how I got this wasn't some sort of magic. I just did units sold times cost per item to find the cost of goods sold. And I did unit remaining times cost per item to find the ending inventory. And here it is, 1,272, 9,680. And that's that. Now for the average, remember the average is different, right? What's the average? The average is you find an average cost of all units available for sale during the period and assign that average cost to the ending inventory and to the cost of goods sold. And how do you find the average? You find the average by using these two numbers. Because if you have total units, 3,220 units, and they all cost 10,952. To find the average price of a unit, you do 10,952 divided by 3,220, and you get 3.40, approximately 3.40. So let's just go with 3. Let's use this so that we do not round intermediate calculations. Let's go with this. And then now we found the average price, right? So basically, all we need to do in the case of this one, though, is going to be different. Oh, different, sorry. All we need to do is just do this times, actually, ending inventory times this, the price we just got. And we would get 1,224 if we use 3.400. If we used 3.40, we'd probably get 1,224 without the zeros. 3.40 right here. There you go. So if you round it up to just maybe one, then if you round the answers to two decimal places or one, then you should get 1,224. And then for cost of goods sold, you do cost of goods sold right here times the same price down here, which I just rounded up, and you get 997. Let me take the full number without rounding it up. 972. Yeah, that makes sense. So oh, sorry, right here. And let me also do the same thing for this and for that ending inventory. And if I were to just round it up, we are good to go. 9,728, 1,224. And this is the answer for the question in chapter 5, question 6. Now, the most important things to remember are, how do you do specific identification? You do it, they will tell you where to get it from. Weighted average is pretty easy. Total units, total cost divided by total units to find the average price, and then you times it by the ending inventory to get the total ending inventory or the cost of goods sold. FIFO is basically first in, first out. Whatever comes in first goes out first. And then LIFO, whatever comes in last goes out last. I really hope this helps. And thank you so much for listening.